Yeah. So here's what's interesting about GameStop, and I felt somewhat a little bit tied to it in a sense. So late December or last year, my brother. I'm in Whittier, living with my brother here in the house we kind of grew up. It's just me and him.
Nice.
And we're having breakfast. Lockdown life, It's like why live in some place in downtown LA, right?
Right.
I tell my brother, he's like, hey, why don't you check out this GameStop? They're talking about Wall Street bets. And so, I'm like,
your brother an investor as well?
No, he works for SoCal Gas,
Okay.
corporate, but he knows that like I let's just say, I guess ever since I left Goldman, I sort of managed my own book, if you will, like my own portfolio, like making my own trades, etc. So he tells me like at GameStop, and so I take a look, and I think everyone's all familiar with what they do, right? They're a retailer that declined, right? Video games, etc. I noticed that it has like this high short interest, right? So I think that's probably start there. Like, I don't know if everyone knows what shorting a stock is, right? And that's probably
I don't.
Yeah, so that's and I think that's where it really comes into play a little bit later, and we talk about hedge funds, right? So if I'm Tom, say you buy GameStop, right? And you own 1,000 shares in your Fidelity account, let's just say.
All right.
I'm a hedge fund. Okay. And I'm like, you know what? This GameStop company's garbage. I'm going to short it, meaning I'm going to make money if it goes down.
Okay.
And how do I do that? Right. So Fidelity's got this, it's called the SEC lending desk, which you probably have no idea. And a lot of people don't. If you're long a stock, your shares are probably lent out somewhere. I'll guarantee that.
All right.
So, and there is regulation around this, and we'll kind of go into that a little bit later. But in order for me to short that stock, I need to have a borrow, they call it. So Fidelity will lend those shares, those 1,000 shares to me, and I get they call it like a locate, if you will. So then there's numbers assigned to it and everything. So I'm borrowing your 1,000 shares, and now I basically have sold those shares at say $100, right? So 1,000 shares that I sold at 100, I'm shorting. You might have bought it at like, who knows, $50, right? Who knows when, right?
Okay.
So I'm short 1,000 shares of GameStop that I bought at $100. And let's just say it drops to 80, okay? I can go into the market, they call cover, and buy those shares at $80. I bought it, but I had already sold them already at 100. So I booked that $20 difference.
Okay.
So 20 times 1,000 would be $20,000 that I gain, right? So I'm basically selling a stock that I've borrowed from you, but I buy it at a future date.
Now,
which sounds a little confusing, right?
No, but why is this function necessary to make our economy go? Like, why even create this?
So there's various arguments for it. The most typical argument is that short sellers add liquidity to the market, meaning that there's people buying and selling, right? Because when I short it, I'm technically selling, so that you're adding more volume.
Okay.
There is the thesis that, or at least they say that short sellers look for companies that might be fraudulent, might be doing something bad, right? And they do the deep work, right? And say, hey, you know what? This company there's some corrupt stuff going on here.
Fishy here. Huh?
Like Enron, think of Enron, right? And there was probably short sellers that came in and found there was some stuff going on. And so that's what's sort of the argument for that.
But
whether or not you believe that.
My 401k is the other thing, right? I'm long.
You're long.
I want it to go up all the time.
Exactly. So, and most, I would say like 90% of Americans have a 401k, Roth IRA, etc. You're long, right? Or I don't want to say 90%. I don't know. I think it's 45% of Americans have like stock, I think, right? So to that effect. So you're long, right? So the short sellers.
I'm not trying to. I don't mean to be simple, but if the thing has been going up since 2008, how much farther can it go? Am I in the wrong position? Should I be waiting for it to fall like these short guys?
No.
It can't just go to infinity, can it? I mean, at some point, it's.
You're talking about just the stock market in general?
Yeah.
I think that's a good question. There's going to be corrections, right?
Yeah.
I think
when I turn 55.
Well, that's where you rebalance, right? They say, right?
62. I'm
gonna go some bonds, right, or go something safer. I think so. You think about humanity, right? So I'll go a little deep here, right?
Please.
There's always going to be population growth, right? Or at least we assume. There's always going to be new businesses. There's going to be, so we have 300 million Americans right now. I'm not sure what our like birth rate is, but maybe in 50 years, there's like 330 million, right?
Right.
So that's population growth. That's people who need to eat, people who want clothes. And so that's the growth in the stock market.
Okay.
In theory, right? Where you have like, say, Japan, who I think has like almost like a negative birth rate, right? So so it's been so over the last 20 years, like their market has really been going up as a function of the Japanese central bank. They've been buying their stock. Like I think they own like 80% of the stock in the Nikkei.
Wow.
And so I don't think a lot of people know that, but that's the reality of Japanese stock market. Wow. And so that's
a dangerous deal, right?
Yeah, it is. And so you think about, well, how's the Japanese economy 100 years going to look, right? They've had the same number of people and they have an aging population. There's a big, it's weighted towards older people, and so there's not as many young people. How are they going to support that economy with those numbers? So that's actually a very good comparison, because then you can see how, okay, I can see how America continues to grow, population growth, et cetera, new businesses, people, and that's in theory how the stock market grows.
Okay.
And yeah, that's a good. That's a very good question, though.
So what did these guys do? So they bought a bunch of shorts.
So you got GameStop, which a lot of people thought, okay, this is going to go in the dumpster. It's going to go bankrupt. It's just, these retail stores. Everyone's playing. Everyone's at home playing PlayStation, downloading the games, right?
Yeah, we don't buy them.
Yeah, exactly. You're not buying them, and so you got all these hedge funds that shorted the stock, right? And here's where I think people were wondering, well, how do you short more than they say the float, right? They say 120% of like the shares were shorted, right?
Okay.
And a lot of people can't wrap their head around it. I'm going to explain this, and I think it's going to make perfect sense once I'm done.
All right, love it.
So let's just say GameStop has 100 million shares outstanding, right? And a lot of people don't know, maybe they do know, is that the Chewy's founder, I think his name was like Ryan Cohen.
Okay, Chewy.
Yeah. So we all know Chewy if you have a dog, cat, etc. He was the founder. I think PetSmart's bought him out for like $8 billion, right? So he's done well for himself. So he buys like a 7% stake of GameStop, right, in late last year.
Long.
He's like, hey, I think his vision was like, you know what? I think I could revitalize this company, right? So he gets 7 million. So he owns, let's just say 7 million. And don't quote me on the numbers, but we're just gonna use the example. Actually, let's just say he owns 10%.
Right.
So he gets 10%. He's got 10 million shares, right? Out of the 100 million. Yep. So the float is now 90%, right? Meaning the actual, because he's gonna hold on to that. He's not selling.
Yeah.
That's not trading.
He's in.
And then exactly. Then you got Michael Burry. I don't know if you've seen the Big Short. I think Christian Bale plays him, right? He's the guy who he's got Asperger's, right? And so Michael Burry's actually.
I got drunk halfway through that because I couldn't figure it out. I was like, okay.
So last year he's still managing money, so he kind of surfaces again, which is kind of interesting, right?
That's weird.
And so they're probably gonna have a movie with him again. So, he takes a stake as well. So let's just say he takes a 5% stake, right? So now we got 10 million, you got 15 million, and you probably got like the executive board probably has another, let's just say 5 million, right? So now you got 20 million shares that are not traded off. Basically, they're locked up.
They're locked up.
So now the float is now 80 million. They call it like the float. Mm-hmm. You got 80 million shares, but those shares that they have, they're probably lending, their broker is lending those out, right? So the float.
And you're allowed to do that. You're allowed to lend those.
Yeah, you can. So most positive you can. So that's where you get more than 100% of the float being shorted. Okay. See, does that sort of make sense now? And that's where, and so add some other corporate. Let's just say Fidelity has GameStop, right? You could start whittling this down. We're like, oh my god, the float was only 20 million, but yet, 80 million shares were shorted, right? And so that's where, so that's where we have this. They call it infinity short squeeze. Okay. So now let's get to the Wall Street guys, the Wall Street bet guys, right? The on Reddit, right? So mid-January. Well, here's where the story comes in. And geez, Louise, this is the worst trade of my life ever. We'll get to that later. But I buy at $22, a good chunk of change. In
buy
December.
GameStop.
I bought GameStop at 22 because I told him, I was like, dude, this is ripe for a short squeeze. I'm like, if this founder gets a board seat or he does something, this thing's going to take off. Right. Like, because I'm very familiar, this is from experience, right?
Right.
And so I go pretty big on it. And then in January, about mid-January, I can't remember the date, it drops to 17. And so I'm like,
it hurt, huh?
Like, oh yeah, I'm hurt. I'm like, you know what? I got to get out. Like I can't risk proper risk management. I was, if I had a job or whatnot, I probably would just let it ride, right? I'm like on my own, I'm like, hey, this is my bread and butter. Like I got to eat. I mean, I say that, but you know what I mean? It's just like, I can't risk that capital. Like I just can't. And I mean, you can't trade if you lose your capital, right?
Right.
So I get out at $17. But then all the Wall Street stuff started happening. And what really was the catalyst was the Chewy's founder got a board seat. And also, I think maybe some other thing where like, hey, you know what? You got a big stake. He demands a board seat. So now you're like, oh, he's going to start changing the company because he's got a board seat.
Right.
And then you got other people on Reddit, whatnot, saying like, hey, GameStop. And so that triggered the short squeeze, meaning all the people who are short, when it goes up to like 20 to 30, they're like, oh my God, like I just lost, like 50%, right? Because when you're short, you can lose an infinite amount of money. People don't get that.
Woo!
Yeah. So if something goes, if you're short something that's $10, it goes to 100, you got to pay that $90 difference. Oh. So imagine if it goes to 1,000, right? So these guys are getting, it's called a short squeeze because they're getting squeezed, and you got the guys who are, so they call it covering. They're covering their shorts, which means they got to buy. You got the Reddit people, Wall Street bets. Hey, let's buy this company. Let's drive this stock as high as we can to screw with the hedge funds.
Yeah.
And so it becomes a feedback loop.
Right.
That's what ends up happening so it goes to 20 to 30, let's just say. And then you got other guys, 20, 30, I'm going to short this. Oh, it goes to 40. The guys who came in at 30 are like, oh my God, I can't take this. They shorted. You got the Reddit people like, keep buying. Let's drive this thing to 1,000, right? Because that's what was happening. And so that's where within a span of 3 or 4 days, it went from 20 to like $400, right?
Jeez.
And so
those guys had to pay $380 on those shorts.
If you were able to stomach that, I think so, right? And I think Melvin Capital, right? I think they lost $3 billion. I'm not even sure what their position was. And so that is the infinity short squeeze, right? And then here's where it gets complicated, right? On Thursday, like everyone's like, what's going to happen with GameStop, et cetera. Then you have a majority of these people trading on the Robinhood app, right?
Yeah.
Everyone on Wall Street bets for the most part, and people, my brother's on Robinhood, so are his friends. They just all of a sudden say, you can't buy GameStop anymore. Jeez. Like you can only sell it. What? And so I think was it Thursday? I think it was on Thursday. It was at 300 something. Market opens. They made those restrictions, and you're basically taking millions of buyers out of the market, right? You could sell, but you take a pool of buyers, and that's when you saw that drop, right? And people were just furious, right? Because they basically, for all intents and purposes, from my opinion, that's price manipulation.
Absolutely.
So that's where the rage came in, right? Saying, but the hedge funds could still buy. They can still sell, right? You just crushed the little guy, right? And so I don't think there's anything, there's going to be a lot of talk of like, well, was Robinhood in cahoots with the Citadel so that because they're getting crushed and 0.72. I think there's a lot more to it. I think one of the primary reasons was they got to settle trades with DTC. It's called DTC, which is like the clearinghouse. And then here's where my experiences in operations comes in. Is like we dealt with these trades. I think they might have had like a margin call of like $3 billion Thursday morning or something. Jeez. And they didn't have the cash. Is what my understanding. And so they worked with DTC to say, okay, look, we can only put 1.5 billion, what have you. And they decided, well, yeah, if you restrict the stock, okay, we'll bring it down to 750 million. And so that's where this whole they get restricted. I think how many names? It was AMC, it was GameStop, some other names. And so just the populist sort of anger really came out, and rightfully so. So at this point, I had sold my shares. I bought in at 92 because I'd done my research on this company. So like, this is a short squeeze. This thing's going to go to like 500. Like I just knew it like off the top of my head because given the short interest, I ended up selling like at 350. So a nice little gain. But it's the fact that one day they really hosed over a lot of people, in my opinion. And so there's already a bunch of lawsuits, right? And I think
where's the legal stuff going to go? That's my question. And let me ask you a quick question first.
Yeah.
GameStop is they're not a dividend paying company, are they?
You know what? They actually are. I think I saw they have like a 1.5 yield, I think. So I think very small, but from what I saw. I think that's, again, don't quote me on that line, but
But the evaluation on the company was like turned into like this massive amount of money.
yeah,
right?
it turned like 20 billion, right? And that's actually one of my initial thesis in December was I saw it was valued at about 500 million, I think, right? At $22. And I was telling my brother Aaron, I was like, hey, you know what? If this thing
And
just
that might have been an over-evaluation too.
yeah, it might have been actually. So
I mean, have you ever been in a GameStop? That place is.
I have not actually.
They have gamers working the register in the place.
God, okay. So they're just there playing games.
They're just like, I don't know, man. Whatever. Yeah, come on.
So, I mean, I do remember like back in the day, right? You turned in
Yeah,
the game, they give you $1, right? 50 cents
Yeah.
or something like that. So,
You could trade games and stuff.
yeah, exactly. So, but yeah, you're right. The valuation went to like from $500 million, to
So
like
these
20,
average
25.
people, these average folks that were on Reddit and then kind of
Yeah.
rallied,
Yeah.
went viral in some weird way, and they all
Mhm.
put in their $500 or their $1,000,
Yeah.
and it went crazy.
Correct.
And when they stopped, when Thursday shut it down, when they woke up Friday, they lost a bunch of money.
Well, I think on Thursday, everyone knew it was stopped, right? And so they allowed you to sell but not buy. And so if you knew that, okay, wait, they just took a whole group of buyers out, and if you sold, then we probably made out pretty good. But the whole thesis was that, just hold the line, right? Hold the line,
Yeah.
hold the line. Don't sell your shares. Let's stick it to the man, right?
Yeah.
And so I think people did, because then on Friday they lifted some of the restrictions a bit, and it did go up again. But I think, as you saw this last week, right, it's just gotten crushed. I think it ended today at $60, I think.
So
yeah.
Robinhood is just a regular company, and they decided that they were going to change the rules. It wasn't
Correct.
something from the government. It wasn't something from.
It was from it really was. I think they got a huge margin call. They didn't have the cash to meet it, because they did. And let me take a step back really quick. They did have to raise, I think, $3 billion from their venture capitalists, or their VC firm, right? Like Sequoia, I think, is one of their. So they had to raise money.
So Robinhood they're investing too. They're not just a middleman.
Let me say. So they're a private company, right? They're a private company that has investors, meaning that people who put like a couple $1 billion in to make these companies that start them up, right? But when they got hit with this DTC margin call, they didn't have the cash on hand, so that would have bankrupted the company on Thursday. So my understanding is they got a capital infusion from their investors. Non-investors are private equity firms, and they threw in, I think, total of $3 billion, and then they had to draw on their line of credit from the banks. And so I thought, like, this company might go bankrupt by like next week, because then you also got people who were pissed off and said, you know what, delete Robinhood, which I think a lot of people did. And so I think it's still on the fence on how will they survive. Will they go IPO this year? Hell no. They are not.
Why was Robinhood so popular? Was it like low trading costs, or what?
I think it was it was zero trade commissions, right? So you traded for free. A lot of people say it was the UI was very intuitive, like very trade, buy,
just
sell.
an app, right? Just on
exactly. And I think, there's some element that there's arguments that, hey, you basically made investing like a gambling game, and people are getting their dopamine rush, right?
Right.
And to be fair, like I was like, you know what? Let me just see what this is about. I threw in some money, and I was like, I just want to trade an option trade, and I could see, like, do you think it's going to go up or down? They really make it as if you're gambling, and I was like, okay, I could see how could get addictive.
Hold your hand, huh?
Exactly. No, exactly. Like, you want to do a call option? Do you think it's going to go up or down? When do you think it'll go up or down? By this date? What's your percentage of winning? They really break it down. Where my Vanguard account's like strike price, this and that, and it's like the most like archaic system.
Yeah.
But
I remember like 10 years ago, my first gig at Villa Park I was an econ teacher. Like I literally have no money in my savings. Like I'm the worst of all time. And I said, okay, what we're going to do on Fridays? We're going to play Hollywood Stock Exchange. Everyone get out their phones, and every Friday we're just going to, it's fake money and fake.
Yeah.
I figured you guys are going to learn about the stock exchange and the bond market. Right. And so everything was going good. And then it started getting competitive, and they started asking me questions that I couldn't answer. I was like, I don't know what the fuck you're talking about, man.
Well, that's what you tell them, like, hey, do your own due diligence.
I'm like, you guys can keep playing. The lesson's over. The lesson's over.
Got it. No, there's, I think one thing though that and I got mad at watching CNBC during this time, is that and to your point though, there are some smart guys that are on Reddit, on Wall Street Bets, that put very good thesis, very good analysis. Like, hey, I think this company's a buy because of XYZ, cash flow, etc. And they're doing good analysis. And I'm watching CNBC and I'm like, my blood's boiling again. Like, like we talked about before, I'm like, dude, they're basic. They don't even know what they're talking about. They're saying, well, these retail investors, they shouldn't be doing this. And I don't know about their analysis. I'm like, there are guys that will go on, I guarantee you, on Wall Street Bets with any, like in terms of intellect, smart analysis with any hedge fund guy on Wall Street, in my opinion. There's guys out there.
Wear suits.
Exactly. They're not the suits, right? So, and so this is what happened. And I think we're still seeing, I think we kind of saw like the drawdown this week where, here's the thing with the short squeeze though, man. I think people fail to realize is that it doesn't go on forever. Financial gravity will come and get you.
Right.
And as fast as it goes up, it goes down just as quick. And I think you saw, I think it was down 40% today. I think the day before it was down another 30%. So I feel, it's hopefully no one bought like at $400, right? Because now it's at $60. And you got people like, then you got these billionaires like Elon Musk and Shamath, who, I guess he owns the Warriors, right? And David Portnoy, right, from Barstool, saying, the guys, hold the line. I bought. Did they really buy? I don't know. It's so
they're set up.
Yeah, you're left holding the bag, and that's unfortunate. I do think there was a point where they might have broke the system or the stock market.